price rotation on a liquidity continuum basis, meaning that the price is efficiently delivered between a range of price action. For instance, if we were to look at the range between 103.20 and 103.40, that's 20 pips for euro. It's moved up, down in that range between 40 and 20 multiple times. Notice that? So if price has been moving back and forth between a defined range of 103.40 and 103.20, if we get a bias determined, which is what I'm sharing, I'm telling you that this is where it was going to go and then higher still. If we ever get an opening on a candle and it drops down to a previous high. Now, normally if this would have stopped short, like say the low was up here and didn't go all the way down to Monday's high, that would create a typical deferred inefficiency, meaning that it would go to a fair value gap protocol, something like what we've seen. Well, let me take it back up one more time. This is a fair value gap between this candle's high and this candle's low, and that one candle on the downside. That low, that high, in between those two price points, price only went down. So it's a fair value gap, yes, but a specific category is a SIBI, sell side imbalance, buy side inefficiency. So it needs to see what? To be efficiently balanced. Upside delivery. And that happens on this candle here. And then we opened and we were in this weekly candle. But I mentioned during this weekly candle's formation that we would use this as an inversion fair value gap. If we see this formation, and this is what I dubbed a immediate rebalance. So we opened here, traded down to a previous day's high. It doesn't mean it's the previous day immediately to the left or yesterday's high. We're always referring to the essence of inefficiency and redelivery. Fair value gaps highlight those inefficiencies and opportunity for redelivery. So, for instance, like take a look at this candle here. We have this candle's high, this candle's low, so there's a fair value gap. It trades down, but it doesn't go all the way back down to that high. Notice that? That's fine. That right there, to me, is a breakaway gap. This candle opening, it trades down and goes right to this candle's high, which is Monday's high. So it gives no room or opportunity for an inefficiency to exist. Why? Why would that happen? If we're bullish and markets are expected to go higher and it does this type of formation, you'll want to write this in your journal. This is one of the most powerful signatures for immediate dynamic price delivery. You've heard me refer to an immediate rebalance, and that is one of the strongest algorithmic price delivery signatures you're going to see. Look at the price delivery here on dollar. Look how fast and snappy that was. Notice that? The fact that we opened, traded down, and then rallied to that point, that gave me the context to tell you we're going to continue higher on dollar and lower on euro dollar. So it's still a risk-off scenario, meaning dollar goes higher. Typically, that's a risk-off scenario. All foreign currencies should decline more in sympathy to a higher dollar.